With the up and down markets, all the terminology, and of course the major decisions, for some investing can be a daunting task. Traditional financial planning may involve individuals striving not to go broke by paying down mortgages quickly and maxing out RRSPs. According to investment director Shafik Hirani, wealth creation doesn't have to be that way, suggesting people focus on what he calls the locus of control.
That means they're thinking that they're going to be happy or affluent if I get a pay raise, if my investments do better. And they try to make a shift, and we try to make a shift when it comes to our approach to planning towards changing things towards an internal locus of control, accepting a little bit more accountability for where you're going in life, setting up patterns, beginning with the end in mind, setting a goal. You can't build a puzzle unless you have a picture of that box.
Taking what he calls a unique approach to financial planning, Shafik is using his years of experience to help people avoid the common pitfalls of investing and build real wealth. He suggests people start at the end rather than the beginning.
Everybody's got a number. Everybody's got a retirement income, a projected income, so I would start with where they're going to be when they're 60. And then I would work backwards from there. You know, when you build a house, people don't build a house by putting up a bunch of 2x4s. What they do is they set blueprints, they hire contractors, and then they start building the house.
When it comes to investing, creating, and maintaining wealth, Shafik Hirani believes it's part art and part science.
If you're going to get to a certain level of wealth, it is the science. The science is what is your investment portfolio statement, what is your correlation between your investments, what is the expected return, what is the standard deviation on your portfolio, what is the risk you're taking. But I think the art comes from the humility, the gratitude, the empathy, the purpose that the advisor must have in helping their clients get to a certain point, to a certain level of affluence.
Investing can bring with it obstacles, both personal and in the market. Hirani believes people can overcome personal barriers by taking initiative in your portfolio, being aware, and avoiding procrastination. As for the market, he suggests not getting caught up in the current happenings or noise.
10 years, the markets never have gone down, ever. So over a 10-year period, if you can look at it, will people still be driving cars? If people are still going to be driving cars in 10 years, and that's our philosophy, we have to own oil and gas companies. Will people be banking? If people are going to be banking, we got to own banks. And will people get sick? Yep, and then we got to own healthcare companies.
According to Hirani, when looking to create real wealth, it comes down to treating yourself like a company and doing things as a business would, like having a debt-to-equity ratio.
They look at how much they have for debt, how much they have for equity, and they establish what's called a weighted average cost of capital in their share prices. And that's how they project out their future. Well, individuals don't. We pay off our mortgage as fast as possible, max out our RSPs. And with the belief that this is going to get us to attain a level of wealth, and it doesn't. Most people on average end up middle class.
Chad Carrier, Energy TV.